Question 1. Liability coverage. Which of the following statements about professional liability insurance is accurate? A. Professional liability insurance only covers physical injury claims resulting from professional negligence. B. Professional liability insurance is typically mandatory for all healthcare professionals in Texas. C. Professional liability insurance protects professionals against claims arising from errors, omissions, or negligence in the performance of their professional duties. D. Professional liability insurance is primarily designed to cover product liability claims made against a business. Answer. C. Explanation. Professional liability insurance, also known as errors and omissions (EO) insurance, is specifically designed to protect professionals from claims arising due to negligence, errors, or omissions in the performance of their professional services. Option A is incorrect because professional liability insurance can cover a range of claims beyond physical injury, including financial losses resulting from service failure. Option B is partially true, as certain professions like healthcare may have specific regulations regarding insurance coverage, but it is not universally mandatory for all healthcare professionals in Texas. Option D is incorrect, as product liability insurance specifically addresses claims related to the products sold by a business, not services rendered by professionals. Question 2. Risk management. In the context of risk management, which of the following strategies is primarily aimed at eliminating a risk altogether? A. Risk retention. B. Risk avoidance. C. Risk transfer. D. Risk reduction. Answer. B. Explanation. Risk avoidance is a strategy used in risk management that involves taking steps to eliminate the risk entirely. This can include altering plans to sidestep potential risk factors. Optional risk retention involves accepting the risk when the costs of mitigation are greater than the potential loss. Option C, risk transfer, involves shifting the risk to another party, commonly through insurance. Option D, risk reduction, involves implementing measures to minimize the impact or likelihood of the risk but does not eliminate it completely. Question 3, scenario-based question. Mr. Thompson, a small business owner in Texas, discovers that one of his employees accidentally damaged a client's property while performing a service. The client is now seeking compensation for the damages. What should Mr. Thompson do first in response to the claim? A. Immediately pay the client the amount requested to avoid further disputes. B. File a claim with his commercial general liability (CGL) insurance carrier and report the incident. C. Contact the employee responsible for the damage and discuss how to resolve the matter privately. D. Ignore the client's request since he believes the damages are exaggerated and will not lead to a serious claim. Answer. B. Explanation. In this scenario, Mr. Thompson should file a claim with his commercial general liability (CGL) insurance carrier and report the incident. The CGL policy typically covers claims made against the business for bodily injury and property damage resulting from its operations. Option A is not advisable, as paying the client directly without involving insurance could lead to unforeseen liabilities and might not be the full amount needed. Option C is inappropriate, as it does not involve the necessary insurance protections and discussions may inadvertently lead to admissions of liability. Option D is also not recommended. Ignoring the client's request could escalate the situation and lead to more significant legal consequences or loss of trust. In summary, Mr. Thompson should leverage his insurance coverage to handle the claim appropriately and mitigate financial risk while ensuring compliance with legal obligations. Question 4. Insurable interest. Which of the following best describes the principle of insurable interest in insurance contracts? A. It is a legal requirement that mandates the insured must have a financial stake in the subject matter of the insurance. B. It refers to the insurer's obligation to compensate the insured for any losses incurred. C. It ensures that the insured can claim the full value of the property regardless of actual loss. D. Is a principle that prevents insured individuals from profiting from a loss. Answer A. Explanation. The principle of insurable interest requires that the insured has a legitimate financial interest in the subject matter of the insurance policy. This principle ensures that the insured will suffer financial loss if the insured item is damaged or destroyed, thereby preventing insurance fraud. Option B is incorrect because it describes the insurer's obligation rather than the insured's stake. Option C is misleading. The insured can only claim actual losses, not full value, without justification. Option D is partially true. While insured individuals should not profit from a loss, this statement does not accurately define insurable interest. Question 5. Exclusions in insurance policies. In a standard commercial general liability CGL policy, which of the following is most likely to be excluded from coverage? A. Bodily injury caused by an employee while working. B. Property damage resulting from an intentional act. C. Claims arising from a defective product manufactured by the insured. D. Personal injury due to advertising practices. Answer: B. Explanation. Most standard CGL policies exclude coverage for property damage resulting from intentional acts. Insurance is designed to cover unintentional acts, and intentional damage typically falls outside of the coverage. Option is incorrect because bodily injury caused by an employee while performing their job duties is typically covered. Option C is also incorrect. While product liability may be complicated, claims arising from defective products can be covered under the CGL policy. Option D is generally covered under a CGL policy unless specific exclusions apply, making it an inaccurate choice. Question 6. Workers' compensation insurance. Which of the following statements regarding workers' compensation insurance in Texas is accurate? A. Texas requires all employers to provide workers' compensation insurance for their employees. B. Employers in Texas have the option to either provide workers' compensation insurance or retain the risk through self-insurance. C. Workers' compensation insurance covers employees for all types of injuries sustained on the job, regardless of fault. D. Employees can sue their employers for workplace injuries if the employer has workers' compensation insurance. Answer: B. Explanation. In Texas, employers are not mandated to carry workers' compensation insurance but can choose to self-insure. Those who opt out of the system assume all risks and liabilities associated with workplace injuries. Option is incorrect because Texas does not require all employers to provide workers' compensation insurance. Option C is misleading. While workers' compensation generally covers injuries regardless of fault, there are exceptions for injuries caused by the employee's own intoxication or misconduct. Option D is incorrect. Employees cannot sue employers for workplace injuries if they are covered under workers' compensation insurance, as this insurance serves as the exclusive remedy. Question 7. Claims handling process. What is the primary purpose of subrogation in the insurance claims process? A. To allow the insurer to recover costs from a third party responsible for the loss. B. To ensure the insured receives the full value of the policy coverage. C. To allow the insurer to cancel the policy if the insured files too many claims. D. To prevent fraudulent claims from being filed. Answer A. Explanation. Subrogation allows an insurer to pursue recovery from a third party that caused the loss after compensating the insured. This principle helps insurers manage costs and prevents the insured from receiving double compensation for the same loss. Option B is incorrect because subrogation does not ensure the insured receives full policy value. It focuses on recovery from third parties. Option C is unrelated to subrogation. A policy cancellation is based on underwriting standards and claims history, not the subrogation process. Option D is also incorrect. While subrogation can indirectly reduce fraud, its primary purpose is recovery from responsible third parties. Question 8. Business Owner's Policy BOP. Which of the following statements best describes a business owner's policy BOP? A BOP is a type of liability insurance that covers only product liability claims for small businesses. B. A BOP combines general liability and property coverage into a single policy tailored for small businesses. C. A BOP is required by law for all small businesses operating in Texas. D. A BOP excludes coverage for business interruption losses. Answer B. Explanation. A business owner's policy BOP is designed to meet the needs of small businesses by combining general liability and property insurance into one convenient package. This policy simplifies coverage and is cost-effective for small businesses. Option is incorrect. While it does include liability coverage, it is not limited to product liability claims. Option C is misleading. A BOP is not legally required but is often recommended for small businesses. Option D is incorrect because many BOPs can include coverage for business interruption losses depending on the specifics of the policy. Question 9. Risk transfer. Which of the following best illustrates the concept of risk transfer in insurance? A business owner decides to take out an insurance policy to protect against potential property loss. B. A homeowner decides to implement security measures to reduce the risk of theft. C. An individual creates an emergency fund to cover unforeseen expenses. D. A contractor requires subcontractors to provide proof of insurance for their work. Answer D. Explanation. Risk transfer occurs when one party shifts the risk of loss to another party, often through contracts or insurance policies. In this case, the contractor mitigates their risk by requiring subcontractors to carry their own insurance. Option A describes risk retention, not transfer, as the business owner is still exposed to potential losses. Option B illustrates risk reduction since security measures aim to minimize the chance of theft. Option C is also an example of risk retention as the individual accepts the risk and prepares financially to manage it. Question 10. Ethical responsibilities in insurance. Which of the following is a key ethical responsibility for insurance agents when dealing with clients? A. Agents should disclose their commission structure only if specifically asked by the client. B. Agents should prioritize their own financial interests over client needs. C. Agents must ensure that clients understand the terms and conditions of the policies they purchase. D. Agents are allowed to provide misleading information about coverage options if it benefits their sales. Answer. C. Explanation. Insurance agents have an ethical responsibility to ensure that clients fully understand the terms and conditions of the insurance policies they are purchasing. This transparency fosters trust and helps clients make informed decisions. Option A is incorrect. Agents should proactively disclose commission structures to maintain transparency. Option B is unethical and against industry standards. Agents must prioritize client needs. Option D is also unethical and can lead to serious legal repercussions for both the agent and the agency involved. Question 11. Indemnity principle. Which of the following best describes the indemnity principle in insurance? A. The insured may receive more than the actual loss to restore them to their previous financial position. B. The insured can only claim actual cash value or replacement cost for their losses. C. The indemnity principle allows the insurer to deny claims based on policy exclusions. D. Indemnity refers to the insurer's obligation to cover legal fees incurred by the insured in a lawsuit. Answer. B. Explanation. The indemnity principle stipulates that an insurer can only be compensated for the actual loss incurred, ensuring they do not profit from a claim. This principle maintains fairness and prevents insurance fraud. Option A is incorrect because it implies that the insured can gain more than their loss, violating the principle of indemnity. Option C is misleading. While insurers can deny claims based on exclusions, this does not directly define indemnity. Option D is incorrect because legal fees may or may not be covered depending on the terms of the policy, but they do not define indemnity. Question 12. Liability coverage types. Which type of liability coverage specifically protects against claims arising from professional negligence? A. Personal liability insurance. B. Product liability insurance. C. Professional liability insurance. D. General liability insurance. Answer. C. Explanation. Professional liability insurance, also known as errors and omissions insurance, specifically covers professionals against claims of negligence, malpractice, or errors in the services they provide. This type of insurance is essential for professionals such as doctors, lawyers, and consultants. Option is incorrect. Personal liability insurance covers general liability risks, not professional negligence. Option B covers risks associated with products sold or manufactured but does not relate to professional services. Option D typically covers general liabilities, not specific to professional negligence claims. Question 13. Commercial auto insurance. Which of the following is NOT typically covered under a commercial auto insurance policy? A. Damage to a vehicle owned by an employee when used for business purposes. B. Liability for bodily injury caused by a vehicle owned by the business. C. Damage to the business's own property while being transported in a vehicle. D. Personal use of a company vehicle by an employee. Answer. D. Explanation. Commercial auto insurance generally does not cover personal use of a company vehicle by an employee unless specifically included in the policy. Personal use often requires additional coverage or endorsement. Option is covered as vehicles owned by employees for business purposes are typically included. Option B is correct. Liability for bodily injury caused by a business-owned vehicle is a fundamental coverage. Option C can be covered under specific conditions of the policy, making option D the correct answer. Question 14. Risk management techniques. Which of the following techniques is considered a risk control measure? A. Purchasing additional insurance coverage to transfer risk. B. Conducting regular safety inspections to identify hazards. C. Creating an emergency fund for unexpected expenses. D. Outsourcing business functions to reduce exposure. Answer: B. Explanation. Conducting regular safety inspections is a proactive risk control measure aimed at identifying and mitigating hazards before they lead to losses. This approach helps organizations manage and reduce risks effectively. Option: It describes risk transfer, not control. Option C is an example of risk retention, where the organization accepts the risk. Option D may reduce exposure but is not a direct risk control measure. Question 15. Cancellation and non-renewal. In Texas, under what circumstance can an insurer cancel a policy after it has been in effect for more than 60 days? A. The insured has not made timely payments on the premium. B. The insured has failed to report a claim. C. The insured has committed fraud in obtaining the policy. D. The insurer is dissatisfied with the insured's loss history. Answer: C. Explanation. In Texas, an insurer can cancel a policy after 60 days if the insured has committed fraud or made misrepresentations during the application process. This protects the integrity of the insurance system. Option A is incorrect. While late payments may lead to cancellation within the first 60 days, they do not apply afterward. Option B does not justify cancellation beyond 60 days unless specified in the policy. Option D can lead to non-renewal but is not valid for cancellation after 60 days. Question 16. Subrogation rights. In which of the following scenarios would subrogation rights most likely apply? A. An insured party receives compensation for a loss from their insurance company and later decides not to pursue a claim against a negligent third party. B. An insured party receives a payment from their insurance for a vehicle accident caused by another driver. C. An insured party deliberately damages their own property and files a claim. D. An insured party settles a claim directly with a third party before notifying their insurer. Answer: B. Explanation. Subrogation rights allow the insurer to recover costs from the negligent third party after compensating the insured. In this scenario, the insurer can pursue the other driver for damages after paying the insured's claim. Option is incorrect. A failure to pursue a third party waives the insurer's subrogation rights. Option C does not apply. Subrogation is irrelevant in cases of intentional damage. Option D can complicate or negate subrogation rights because the insurer must be informed of any settlement. Question 17. Commercial General Liability (CGL). Which of the following is a common exclusion found in a commercial general liability (CGL) policy? A. Coverage for injuries occurring on the insured's premises. B. Liability for damages arising from the insured's professional services. C. Claims made for product defects. D. Damage to the insured's own property. Answer: D. Explanation. CGL policies typically exclude coverage for damage to the insured's own property, as the purpose of liability insurance is to protect against claims from third parties. This is often referred to as the known property exclusion. Option A is incorrect. Injuries occurring on the insured's premises are generally covered. Option B is misleading. Claims arising from professional services typically require separate professional liability coverage. Option C can be covered unless specifically excluded, making option D the correct choice. Question 18. Claims handling process. Which step in the claims handling process involves determining whether the policy covers the claimed loss? A. Claims reporting. B. Claims investigation. C. Claims adjustment. D. Claims denial. Answer: B. Explanation. Claims investigation is the critical step where the adjuster reviews the details of the claim, including policy terms, conditions, and exclusions, to determine coverage for the claimed loss. This step is vital for ensuring a fair and accurate claims process. Option A relates to notifying the insurer of the claim, not coverage determination. Option C involves negotiating settlements, which follows coverage determination. Option D occurs only if coverage is denied, making it irrelevant to the initial assessment of coverage. Question 19. Consumer protection laws. Which of the following is a key component of consumer protection laws in Texas as they pertain to insurance? A. Insurers are not required to disclose policy limits to consumers. B. Insurers must provide a free policy review upon request. C. Insurers are prohibited from engaging in deceptive practices regarding policy benefits. D. Insurers can deny claims based on consumer complaints without justification. Answer: C. Explanation. Consumer protection laws in Texas prohibit insurers from engaging in deceptive practices, ensuring that consumers are treated fairly and honestly. This includes accurate representations of policy benefits and terms. Option is incorrect. Insurers must disclose policy limits as part of transparent business practices. Option B is not mandated by law. While insurers may offer reviews, it is not a requirement. Option D is misleading. Insurers must justify claim denials based on policy terms and coverage. Question 20. Ethical considerations. Which of the following best describes a potential conflict of interest for an insurance agent? A. Representing both the insurer and the insured in the same transaction. B. Offering clients personalized service without additional fees. C. Providing clients with a choice of multiple insurance products. D. Referring clients to trusted third-party providers for additional services. Answer A. Explanation. Representing both the insurer and the insured in the same transaction can lead to a conflict of interest, as the agent may have competing loyalties. This situation could compromise the agent's ability to act in the best interest of their client. Option B is not. The conflict personalized service is generally expected in client-agent relationships. Option C promotes transparency and choice, not a conflict. Option D is also ethical if the referrals are made transparently and in the client's best interest. Question 21. Types of coverage. Which type of insurance policy provides coverage for both property damage and bodily injury in a single limit? A. Split limit policy. B. Comprehensive policy. C. Combined single limit policy. D. Personal injury policy. Answer C. Explanation. A combined single limit CSL policy provides a single limit of liability for both property damage and bodily injury. This means that the insured has a set amount available to cover any combination of bodily injury and property damage claims. Option A refers to policies that have separate limits for bodily injury and property damage, not a single limit. Option B is incorrect. Comprehensive policies typically refer to coverage for damages to the insured's own property, not combined limits. Option D refers to coverage for personal injury, which is distinct from bodily injury and property damage. Question 22. Insurance fraud. Which of the following actions would likely be considered insurance fraud? A. Failing to report a minor accident to the insurer. B. Inflating the value of a claim for stolen personal property. C. Filing a claim for damage that occurs outside the policy period. D. All of the above. Answer D. Explanation. All listed actions can be considered forms of insurance fraud. Inflating claims, failing to report incidents accurately, or filing claims outside the coverage period are all deceptive practices that violate insurance laws. Each option reflects unethical behavior that undermines the integrity of the insurance process, making option D the correct answer. Question 23. Umbrella insurance. What is the primary purpose of an umbrella insurance policy? A. To cover losses from natural disasters not included in a standard policy. B. To provide additional liability coverage above the limits of other policies. C. To cover business-related losses not included in a general liability policy. D. To provide coverage for specialized items like jewelry or art. Answer B. Explanation. An umbrella insurance policy is designed to provide extra liability coverage beyond the limits of standard policies, such as homeowners or auto insurance. It acts as a safety net for high-cost claims. Option A is incorrect. Umbrella policies do not typically cover natural disasters unless specified in underlying policies. Option C is misleading. While umbrella policies may extend coverage, they are primarily for personal liability. Option D relates to specialty insurance, not the purpose of umbrella coverage. Question 24. Business interruption insurance. Which of the following events would typically be covered under a business interruption insurance policy? A. A power outage affecting operations. B. A fire that damages the business premises. C. A cybersecurity breach resulting in loss of data. D. Employee misconduct that leads to business losses. Answer B. Explanation. Business interruption insurance covers losses resulting from direct physical damage to the business premises, such as from a fire. It helps cover lost income while the business is being repaired. Option A may not be covered unless tied to physical damage. Typically, power outages are excluded. Option C would require specific cyber liability coverage. Option D is generally not covered under business interruption policies. Question 25. Claims process. During the claims process, what is the primary purpose of the adjuster's investigation? A. To determine if the insured has been honest in their claim submission. B. To establish the full extent of the loss and verify coverage. C. To negotiate a settlement amount with the insured. D. To document the insured's history of previous claims. Answer B. Explanation. The primary purpose of the adjuster's investigation is to assess the extent of the loss and ensure that the claim falls within the coverage of the policy. This process includes verifying the details surrounding the incident. Option is only a part of the investigation if the focus is broader than just honesty. Option C occurs later in the process after the investigation is completed. Option D is not a primary goal. While past claims may be reviewed, the focus is on the current claim. Question 26. Insurer responsibilities. What is an insurer's primary duty after a claim is reported? A. To automatically approve the claim without further review. B. To conduct a thorough investigation of the claim. C. To deny the claim within 10 days. D. To settle the claim based on the insured's stated value. Answer B. Explanation. After a claim is reported, the insurer's primary duty is to conduct a thorough investigation to assess the validity and extent of the claim. This ensures that claims are handled fairly and in accordance with policy terms. Option is incorrect. Claims must be reviewed before approval. Option C is misleading. While timely communication is required, there is no blanket rule to deny claims quickly. Option D does not apply. Settlements must be based on the findings of the investigation, not merely the insured's stated value. Question 27. No-fault insurance. In a no-fault insurance system, what is the primary benefit for insured parties? A. They can sue any party for damages regardless of fault. B. They receive compensation for injuries without proving fault. C. They can collect on both their own and the other party's policy. D. They avoid higher premiums after an accident. Answer B. Explanation. The primary benefit of a no-fault insurance system is that insured parties receive compensation for injuries and losses without needing to prove fault, simplifying the claims process and reducing litigation. Option is incorrect. No-fault systems limit the ability to sue. Option C misrepresents the nature of no-fault coverage. Insured parties typically only collect from their own policy. Option D is not guaranteed. Premiums may still increase based on claims history. Question 28. Liability exclusions. Which of the following is commonly excluded from liability coverage under a general liability policy? A. Damage caused by an employee during work hours. B. Intentional acts of the insured. C. Claims related to products manufactured by the insured. D. Bodily injury to guests at a business event. Answer B. Explanation. Intentional acts of the insured are typically excluded from liability coverage under general liability policies, as insurance is designed to cover accidental damages and losses, not deliberate actions. Option A is incorrect. Employee actions within the scope of employment are usually covered. Option C may have coverage under certain conditions but can also be subject to exclusions. Option D is usually covered unless there are specific exclusions in the policy. Question 29. Policy limits. In Texas, what is the standard minimum liability coverage required for personal auto insurance? A. $15,000 for bodily injury per person, $30,000 for bodily injury per accident, and $5,000 for property damage. B. $25,000 for bodily injury per person, $50,000 for bodily injury per accident, and $10,000 for property damage. C. $50,000 for bodily injury per person, $100,000 for bodily injury per accident, and $25,000 for property damage. D. $30,000 for bodily injury per person, $60,000 for bodily injury per accident, and $15,000 for property damage. Answer A. Explanation. The standard minimum liability coverage required in Texas is indeed $15,000 for bodily injury per person, $30,000 for bodily injury per accident, and $5,000 for property damage. This is often referred to as a 1535 coverage. Options B, C, and D or exceed the minimum required limits. Question 30. Additional insureds. What is the primary purpose of adding an additional insured to a liability insurance policy? A. To increase the premium on the primary insured's policy. B. To extend coverage to another party for claims arising from the primary insured's actions. C. To limit the primary insured's liability in case of a claim. D. To provide coverage for personal property of the additional insured. Answer B. Explanation. Adding an additional insured to a liability insurance policy extends coverage to another party for claims that may arise due to the primary insured's actions, effectively protecting both parties in the event of a lawsuit. Option A is incorrect. Adding additional insureds typically increases coverage, not premiums directly. Option C misrepresents the purpose. It does not limit the primary insured's liability. Option D is incorrect. Additional insured status pertains to liability, not property coverage.